Welcome to today's training session on finance and accounting. It's a privilege to be here today to discuss a vital area that drives decision-making and growth in any organization, finance and accounting. Whether you're an experienced professional or new to this field, understanding financial principles and techniques is critical to success in today's business landscape. The topics we'll be discussing today include 1. Introduction to corporate finance. 2. Financial statement analysis. 3. Budgeting and financial planning techniques. 4. Taxation basics for professionals. 5. Financial modeling in Excel. Let's explore each of these areas in detail and uncover how they contribute to a successful and financially sound organization. 1. Introduction to corporate finance. What is corporate finance? Corporate finance focuses on how companies manage their finances, make investment decisions, and maximize shareholder value. It involves key areas like capital raising, investment analysis, financial structuring, and risk management. Here are the key principles of corporate finance. Capital budgeting. Deciding which projects or investments to pursue. Capital structure. Determining the mix of debt and equity financing. Risk management, assessing and mitigating the financial risks a company faces. Understanding corporate finance is essential for making decisions that drive long-term value for stakeholders. The ultimate goal is to increase the value of the company by efficiently managing its financial resources. 2. Financial statement analysis. What is financial statement analysis? Financial statement analysis is the process of reviewing and analyzing a company's financial statements to make better economic decisions. The three primary financial statements you'll need to understand are: Income statement. Reflects the company's profitability over a specific period. Balance sheet. Shows the company's assets, liabilities, and equity at a particular point in time. Cash flow statement. Provides insights into the company's liquidity and cash management. Here are the key metrics for analysis. Liquidity ratios. Measures a company's ability to meet short-term obligations. Profitability ratios. Assess the company's ability to generate profit. Leverage ratios. Gauge the company's level of debt in relation to equity. By analyzing these financial statements, you can evaluate the health of an organization, identify potential areas of concern, and make data-driven decisions to improve financial performance. 3. Budgeting and financial planning techniques. The importance of budgeting. Budgeting is a crucial financial planning tool that allows companies to allocate resources effectively. A good budget helps ensure that the company's financial goals are met while managing expenses. Here are the steps in budgeting. Set financial goals. Understand the financial objectives and what the organization is trying to achieve. Forecast revenues and expenses. Predict the future financial performance based on past data. Allocate resources. Distribute funds to different departments or projects as needed. Monitor and adjust. Regularly compare actual performance to the budget and adjust accordingly. Here are some financial planning techniques. Zero-based budgeting. Justifying every expense rather than basing the budget on the previous year's spending. Rolling forecasts. Continuously updating the financial forecast based on new data and conditions. Scenario planning. Creating multiple budget scenarios to anticipate various market conditions and outcomes. Mastering these budgeting and financial planning techniques ensures that your organization can maintain a healthy cash flow and pursue its strategic objectives. 4. Taxation basics for professionals. Understanding the basics of taxation. Taxation is a critical aspect of financial planning for any company. Businesses must navigate complex tax laws and regulations to remain compliant while minimizing tax liabilities. Here are the types of taxes. Corporate income tax. Taxes levied on a company's earnings. Sales tax. Taxes applied to the sale of goods and services. Payroll taxes. Taxes related to employee compensation. Here are some tax strategies for businesses. Tax deductions. Identifying allowable expenses that can reduce taxable income. Tax credits. Reductions in tax liability based on specific activities or investments. Tax deferral. Postponing taxes through strategic planning, for example, retirement contributions. It's important for professionals to understand the tax landscape, as this knowledge allows for more effective planning, compliance, and potential savings opportunities for the business. 5. Financial modeling in Excel. What is financial modeling? Financial modeling is the process of creating a mathematical representation of a company's financial performance. The goal is to forecast future performance based on historical data, assumptions, and variables. Excel is one of the most powerful tools used for financial modeling. Here are the key components of a financial model. Revenue projections. Estimating future income based on market conditions and company strategies. Cost structures. Mapping out fixed and variable costs to understand how they affect profitability. Cash flow forecasting. Predicting how cash will flow in and out of the business. Valuation models. Estimating the value of the company based on projected earnings and risks. Using Excel for financial modeling. Excel is ideal for building models due to its flexibility and powerful functions. Key Excel tools for financial modeling include pivot tables, organizing and summarizing large datasets, VLOOKUP and index or match, searching for and retrieving data from tables, scenario analysis, evaluating different outcomes based on changing assumptions. By mastering financial modeling in Excel, professionals can better predict financial outcomes, assess risks, and create plans that support business growth. In summary, understanding the core principles of finance and accounting is essential for professionals in today's business world. Whether you're managing corporate finance, analyzing financial statements, creating budgets, navigating taxation, or building financial models in Excel, each of these skills plays a crucial role in making data-driven decisions that drive a business forward. As professionals, we must continue to develop our knowledge in these areas, ensuring that we can make informed decisions, optimize performance, and contribute to the overall success of our organizations. Thank you for your attention, and I encourage you to dive deeper into these topics to further enhance your skills and continue thriving in the world of finance and accounting. See you next time.